Do interest rates look like they're heading higher into 2024, and just how high could they go?
Um, as you know, I've spoken. I've been an advisor to numerous central banks, and what is curious here, I can tell you, interest rates are going higher into next year. And if you look at it, when did the Fed start to raise rates? It was March of 22, a couple weeks after the Ukrainian War began. The biggest inflationary aspect, historically, is always war. Why is Powell, when he's testifying, he never mentions that? But effectively, because politically he cannot criticize the government publicly. So he's basically just talking about, inflation prices and and employment, and people just look at those two things. But as long as you look at all the money that's being poured into Ukraine, Biden has already given them twice the annual budget of Germany. He's publicly admitted he's paying all the salaries of the Ukrainian people and their pensions.
Do stock markets tend to top with interest rates?
No, not really. They peak when you find out that the expectations of the future, all right, no longer match the price. All right, we've done studies on this, and the stock market has never peaked with the same level of interest rates. If you think it's going to go up 20% next year, you'll pay 10. If you don't think it's going to go up 5%, you're not going to pay 5. It's really the difference between expectations. And we probably have another year before the interest rates are going to decline, and that has to do mainly with war and all this money that's just being squandered on the same thing. I mean, Vietnam created a tremendous wave of inflation. By the time it was over, a Cadillac went from $3,000 to $6,000. So we have to understand it's really war that is driving the interest rates, and just the central banks cannot come out and speak, honestly to the public. And I mean, as you know, I was called in by Beijing, and I met with the central bank there after the 97 Asian currency crisis. And I had said, look, the capital flow shifted and all the money was heading back to Europe to get in for the euro, which was starting in 98. And so I went over there and met with them, and they said, you're doing a really great job. You're correct. We agree. The capital flows have shifted. I said, well, why don't you come out and basically, chime in on this? And they said, oh, we can't come out and criticize another central bank. So China already figured that out, and that was 1997.
Is the inverted yield curve in the bond market a concern? Apparently it's had its biggest gap since 1981 when we had super high inflation.
Well, also what's happening here is that you had interest rates at artificially low levels for so long. Particularly in Europe, they took them negative in 2014. So the London bond crisis that took place was because now interest rates are rising. And if you're going to buy a 20 or 30-year bond, every quarter point increase, you have to multiply that out for 30 years. All right? The institutions were losing way too much money. So they've been not buying the long term, and they've been moving into the short term. And it's far more liquid. Janet Yellen even came out and said, well, maybe the Treasury should be buying in the long term and swapping it for the short, because there's no liquidity in the 20 or 30 year anymore.
This week, the Bank of Canada did not raise the bank rate. Could this be a mistake by the bank? Well,
the problem you have with these rising rates is that the small banks are the ones that usually get hit. And where they get hit are more like the areas where the economy is probably the worst. All right, so like the Silicon Valley bank that just got taken over. You have a lot of tech layoffs. You had a lot of people bought mortgages there, and fancy houses, and then lost their jobs. All right, so the bank there all of a sudden is sitting looking at a lot of mortgages that aren't performing, and they end up going down. So I would be more concerned about banks in areas where the real estate has really tumbled, because the smaller banks are not as sophisticated as the larger banks, and a little bit more diversified than just the mortgages. The smaller ones tended to have been looking at the mortgages, and that's what their portfolios are.
What does Socrates see ahead for crude oil, and maybe explain what Socrates is?
Well, Socrates is basically the only fully functioning AI system. It's monitoring the entire world, all the markets. You can subscribe to it on another site, Ask Socrates, but effectively it's writing over 1,000 forecasting reports on every instrument around the world, all by itself. There's no human interaction in it, so there's not biased or something like that. It looks as though we're heading up longer term. I think a lot of this short-term aspect, particularly like in natural gas, etc., they were looking basically for initial lows here,